Welcome to the Stock Market Morning Prep video for Monday, July 21st. Green across the board on Friday. Markets recovered some of its losses from the previous day. We mentioned on Friday, prior to the market opening, saying, use a little caution. We do think that the markets will bounce because it is bullish on an options monthly expiration. And plus you have the Friday of options expiration, and that usually is bullish too as well. Light volume markets just tend to migrate higher, and sure enough, we did get that. So this week is going to be important, right? We're down now very slightly. Market's really not doing much, down about four handles, so it could go either way on the opening. But something that we have to continue to look for. We talked about the Russell being one of the leaders of the 5 indexes that we follow, but we have to really monitor closely. We also talked about the Japanese yen, and we also talked about bonds. The three main focus hasn't changed. We still need to focus on them, and as well as some of the indicators to see if we get a big washout. Got a bunch of emails over the weekend, which was interesting because it kind of gauged sentiment, and they were saying, well, when do you? It was very similar, and a few of them said, well, if you think the market's going to go down, and this is just general conversation, when do you look for to start buying stocks? Well, you want to look for washouts in a lot of the indicators, like what I'm going to show you, the SPX ATR. Once it starts to hit these extreme levels, that's when you know that the markets have at least temporarily bottomed, and then that's when you would start legging into a long, including that would be the NYUD. And this, we want a big washout down here. This is just basically trading in a channel, sideways channel. So a big washout. And then, of course, the McClellan Oscillator, which had pulled down on Thursday and pulled back on Friday, which creates a buy signal for Monday. But that obviously changed. Look what's happened now. We're trading at the lower end of the range. So when they get a big washout, when the McClellan Oscillator gets below that, and then you could add a couple other indicators. Once that happens and you see price really start to break down on higher volume and you get a big volume spike, then it's safe to say you can start adding to your long positions or even nibbling long for a bounce. Then that's how I look at things. And I think that this downside, the next big move is going to be to the downside. We just happen to have that options expiration. Do I know when? No. Nobody knows when the market's going to break down. However, I think this week will be important. We do have a lot of key earnings coming out. I think Google reported some good earnings. We have a bunch of tech and oil names that are going to be reporting. So keep an eye on that. See what the sentiment does. See what the price action does when they report. If they sell into the news, that could be an early sign that market participants are going to start taking profits. Okay. Another thing that I wanted you to look at is also crude oil. Keep an eye on crude. Anywhere around that par area is a good spot to start legging into a long trade for crude going out to September or November, December. Go long term on that. Give yourself some time. I do like crude. I like the crude names too as well. The oil services, the oil exploration, Halliburton's, Baker Hughes, the BHI, Schlumberger, SLB, EOG. A lot of those service names, those are pretty good too as well. So let's dive into it. I want to just show you the indexes. This is really important. If you see this Japanese yen break this 200-day and close above it for a couple of days basing, I think the markets are going to be in trouble. Why? Well, because we haven't seen a break above the 200-day in I think 2 years. If that happens, I think the momentum is going to shift, and everybody that's short this Japanese yen is going to have to cover, and you're going to have a big explosive move to the upside in the spot, and you're going to have downside pressure in equities because it's inversely correlated. The spot yen is, okay? Now, if you're looking at dollar yen, obviously it's correlated with what S&P does. Guys, don't even ask me why. For years, I have never understood why the yen is a safe haven play. I have no idea. It's just absolutely crazy, but it is. And that's what whatever the correlated asset classes are, you have to follow it, And, of course, inversely correlated. And this is inversely correlated. So when money comes into Japanese yen, money should be coming out of the U.S. markets. So keep an eye on this. This is getting very interesting. Now that we're above this Fibonacci cluster of support now, right? It was resistance for all of 2014. I think you get one more geopolitical risk event or something nasty that comes out of Europe or anything for that matter, markets get scared or spooked, and this thing breaks back above it, I think that's going to be a start of a new uptrend. All right, and that's going to be definitely put pressure on equities. Another one is bonds. Right, we talked about bonds. We've been talking about bonds for quite some time now. All of 2014, we identified this inverted head and shoulders here, left shoulder, head, right shoulder, right up in here, slanted neckline. From top to bottom measures to the 1272, I'm sorry, the 161 extension of 140.26. I do say that bonds are still in a short squeeze, and bonds aren't going anywhere. Markets rally, bonds do not sell off. So I would say, be safe to say, anytime you get a dip into the bonds, I'd be buying bonds for a longer term play for that big market correction. And if you can get back into this area here, I'd be picking up shares of TLT or even buy the bonds if you can, the ZB, buy the 30-year Treasury bond futures. I mean, because it's not going anywhere. It's very well bid up. So that's something also. It's a big concern of mine, along with the indicators I just showed you. ES, okay, well, we recouped that 20-day moving average. We're back above the 8, so everything looks great. Not really. I do think that even if we took out the highs from here, I think that would be short-lived, and I think that would be a great shorting opportunity if you can get back into this high and then sell off like we get a reversal candle like this to take it out low. That would be a great short indication, a short trade for me anyway. Diamonds, just kind of drifting along with all the other indexes. They're a very boring index for me, but I'd like to see what the diamonds do. Obviously, it's part of the 5 that we follow. We did have some better volume than anticipated because it is a Friday in the summer. And obviously, guys, this is the real interesting index. All right, one of our leaders here now has broken down, tested the 200. We did rally back up, but we are just going into resistance now. Even if we rally today and we fail, keep watching this IWM, the Russell 2000. I think that is going to be a big indicator of where this market is headed. And if this does not recover, at least come and take out this area here, which we have a lot of resistance, right? Moving average resistance. We have the 8, the 20, the 34, the 50, and of course the 200 way down here. It's going to need to really break it back above and start making higher highs and higher lows. Otherwise, I do think, again, adding fuel to the fire, IWMs will add pressure to the downside as well. Okay, lastly is the Qs. Qs did really well yesterday. Friday, Google's earnings came out, excuse me, and helped this index. So keep an eye on things, guys. I think, the Russell bonds and, of course, the Japanese yen, you can follow that by the FXY ETF. But keep an eye on it because I do think that there's something bigger brewing in the next few weeks to come. And I think you get a summer sell-off. It's just we don't know when it's going to happen, right? We just don't know. The sell-in may go away, did not materialize. So just keep an eye on things. I do think that something bigger is brewing, okay? So look forward to getting back. I hope everybody enjoyed their weekend. And let's see what happens this week here. I think it's going to be interesting, to say the least. Have a great day. We'll speak to you tomorrow. Take care.